A positive result from CPI yesterday had us seeing a little bit of a pump on Bitcoin, which I'm going to be honest with you, that actually caught me quite by surprise. I was expecting some sort of a move like that to happen as a result of FOMC, because that's usually where we see the volatility. However, market maker surprised us and we got it early on the release of CPI. So it actually did catch me off guard. But if you happen to catch my last market update, I said this in that video. If you're find that you're breaking rules because you want to get a trade, then this is going to put those trades even more at risk. So be very, very careful of all the news events that we have coming up next. So yesterday's price action actually gives us a perfect opportunity to talk about how news events can affect the model that we trade here on this channel and what to do when something is not going to plan. And that's exactly what we're going to talk about in today's video. In addition to that, I'm also going to talk to you about the initial $64,000 target that we had and why that may not be off the cards yet. So as always, you know the deal. I'll bring the alpha. You hit that like button down below. Let's go. So let's have a look at Bitcoin and the price action that we've had so far this week. First thing we want to do is identify the weekend trap and also our peak formation from the week prior. So in this case, the peak formation was here. It turned out to be a peak formation high. So your peak formations is where you start your counts. And if it was a peak formation high, we're looking for 3 levels of drop. So we had one through here into the weekend trap. We had our false move week beginning to the upside, and we had our level 2 drop. And this is the reason why I was expecting a third drop, because typically in this model, we will see 3 levels of drops before a reversal into 3 levels of rises and vice versa. So this helps me to remain unemotional when I'm trading. I trade what should happen, and if the price action is showing me something different, then that means the market maker has a different plan, and I don't want to guess what that plan is, because guessing it is where I could end up taking a trade the wrong way and essentially getting stopped out. So for me, if I can identify 2 drops and I'm expecting a third drop, then all I would be looking for is short positions. And if I don't get the perfect entry to get a new short position for a third level drop, I don't bag flip into going the other way. I'm not a flip flop trader. I trade this method, and if the price action is showing me that it's not sticking to the method, I sit on my hands and wait. So let's talk about what happened right here. Now, when I add my important levels to the chart, we can have a look here and see that price here broke the low of the week. This line right here is the low of last week, and we consolidated under it for quite some time. Now, that is usually bearish, and that would be a good area to open up a short position, but you have to wait for your final confirmation, which is in the candlesticks. So in this case, we didn't get a final confirmation because we broke back above that low of the week here with a high volume vector candle. And that was leading into the CPI news event. And this is the point where you say to yourself, the market maker is doing something different. I'm not going to guess. I'm going to sit on my hands and wait, especially knowing that CPI was coming and FOMC was coming. Now, look, many people caught this breakout and, you know, they were all rejoicing on Twitter saying that they called it and whatnot. I mean, what did you call? Like, if you're that excited over a trade like this, can we just get a grip? Like, let's have a look. If you happen to have entered here and you happen to have taken profit, it's a 4-to-1 risk to reward trade. Okay, congratulations. But it came all the way back. So unless you took profit, I don't really know what you're rejoicing about, okay? And there's one thing I love about the crypto bros is when they rejoice over such a small trade, you know they're not genuinely profitable. Anyway, moving on. So as we can see, following FOMC, we just came back to recover all of that. So let's talk about this price action, because this right here shows a very, very typical thing that I always talk about on this channel, which is fast move up, fast move down. So when you have this fast move here, it's usually the false move, especially if it's going against the model, and it's part of a trap. So again, like I said, if people didn't take profit, they're back in either at their entry right now if they're still holding on, or if you longed in here on high leverage, you may have already been liquidated. So remember always, the fast move is the false move unless it retests and maintains structure. So if this was going to be a real change in trend, we would have retested the 50 EMA and we would have held it and we would have changed structure from there and we would have moved to the upside. None of that happened. Okay, following the FOMC, we we just came right back to where we were before we started. So let's go down to the 15-minute time frame so we can assess the price action a little bit more closely. And let's have a look here. So people who would have bought this breakout, if they know how to put their stop losses in the right place, their stop loss should be under this structure at a minimum, right? Now, if they did not take profit on that trade, then here they've ended up being stopped out. You can even see here that the market maker gave the typical M formation, which is a continuation into the third level drop. So price, essentially what I draw from this is that price still has a very high chance of being in the level 3 drop that we were expecting, but we just had that false move to the upside. And that is the exact example of what I meant when I said on Sunday, if something else happens, sit out, don't try to guess, because you could be in for a trap. And this really shows you right here how absolutely people were trapped. And now look where price is. Again, we're back under the low of the week again. We're consolidating under it again. It's essentially all the way back to here prior to the news event as if nothing happened. So the same thing that we were assessing in this price action here is what we should be assessing in this price action here right now. And that is that if price cannot get back above the low of the week and hold it with a positive retest, we should not be bullish. Currently, it's under it and we've consolidated under it. And within that consolidation, there is currently another M formation. But essentially, it's just consolidation. There's no trend in this part of price action right here. We need to wait and see at the session changeover if something changes. But I'm telling you, if the US session does not bring price back above the low of the week and retest it and hold it, showing a new trend, so it would look something like this. We come back above, we retest and hold it, then we would expect that we're going to continue on to do something like this. And each higher high is an EMA target with a higher low. Next one, EMA target, higher low. Unless that were to happen, I honestly don't think we should be bullish right now. That would be the only thing that could happen that would switch my bias and make me think I'm not getting my 1 hour level 3 drop, or this was it and now it's over. The other thing too is the 4 hour time frame. This is the reason people turned so bullish, was that it was just a retest of the 4 hour time frame support. But again, look at the 4 hour time frame. We had the false move up. This is a bearish engulfing, which should be bearish because it's called bearish engulfing, and that has closed down. We have closed back under the 200 EMA. So there is some work to do if we are to continue to hold this support or to move up from where price is now. There is some serious work to do. It's not impossible, but I told you what I would look for in order to become bullish. Without that happening, I still think that this level down here is a target, and I'm going to show you that. So that's between 64,000 to 65,000. And before I get into that, I just want to quickly say that if you are wanting to learn this method in full, we do have full courses that will take you right through from the beginning to the end, how to trade this method in a systematic way. All of the details are on our website. There is a link down below, and that not only includes our courses, but also our community. And we do multiple live sessions per day to show you what is happening in the market. So check that out if you're interested. And also, if you're looking for an exchange to trade on, there are links in the description down below as well, with some non-KYC options if you're struggling to find somewhere to trade. So let's talk about why the 64 to 65 is still a target. We're looking at the heat maps now here, and we can see that this red zone still exists. Now, they have lightened up. That is one thing I will say. The 64,000 region, that was 1.4K orders prior to FOMC. So people were hoping for really bad news, and that was going to be a buy the dip area that people really wanted to pick up Bitcoin. But maybe sentiment has changed, or maybe the orders have been spread out, because that can happen as well. But currently, it's a lot less now. So there's only 644 sitting at 64,000. There is 64,200 is another high level, and closest to the current price with the highest amount of orders is 65,000. So let's put that as our target range. Somewhere between 64 to 65,000 is possible if we do actually continue the current count and we do continue our third level drop. So let's put that as our target. Somewhere between 64 to 65,000 will be our target if we do continue this movement down here into our third level drop. And coincidentally, that level right there is going to be 50% of the daily vector. Quick recap on the daily time frame. This is our current area of interest. If you're looking to long-term invest in Bitcoin, we want to see if the price bounces in this range. Now, I'm not particularly hopeful for that, but If the price action shows me that's all we're going to get, then I will react at the time. But I am hoping that we come into this range because it will be a recovery of this vector candle. And if it holds anywhere in this range, it will be a higher low. Now, when it comes to vector candles, our targets are always the top, the middle, and the bottom, because that's where we tend to get the highest volume in the candles. So the middle area of that candle currently is 63,873, meaning if we do continue to head down into the 64 to 65K region, then we will hold around the halfway mark of this daily vector candle. And I'm not saying that that will be the higher low and then we're going to break out next. I mean, it's possible. We'll have to reassess if it actually does get there. But what I am saying is I would expect some sort of a bounce if we do come down there, because it will be the lower time frame 3-level drop. And then what could happen is on smaller time frames, we could get a little bit of a recovery here that looks something like this. But then when you switch back to the daily, it ends up after 3 rises still creating a lower high, and then we head down potentially further to the bottom of the range. So that's kind of worst case scenario. Would we break the range and go lower? Again, don't know. We would have to assess if we get there. We do know there's a high level of liquidity between 54,400 and 56,400, and that's around the 200 EMA. So I'm not ruling out revisiting the bottom of this current range, and I wouldn't actually even be worried if we did, but I want to reassess what happens in this zone before I think that's actually a possibility. So to me, the daily time frame looks like an M formation. It's in the process of breaking down into hopefully the 64K region. The 4-hour time frame looks like a retail trap to me, if I'm honest. We can see here our 3 levels have played out. Our information has played out. We're in the process of dropping through now. We've broken and retested the 50 EMA. We've broken, had a false move, but we're back under the 200 EMA. This could be a false hope for retail to long off this support. Essentially, at this point in time, it hasn't really gone anywhere. And then the 1 hour is our peak formation high, drop, weekend trap, drop, news event, false narrative, potentially in the last drop. Now there is another thing that I need you to be aware of that could actually change things and have us not hitting the $64,000. And that is that we do have another news event today, and that is the core PPI. That is coming out in a couple of hours from now. So around this news event is when you also want to be watching for potential trend changes or trend continuation, depending on what you think the trend is right now, because many people think the trend is bullish. And I'm kind of a little bit against the grain here, but that PPI will be coming out at the end of the UK session, within the last hour or so of the UK session. And that is where we typically look for trade setups. So we will be looking to see how the UK closes and how it will give us a potential setup to trade the US later tonight. So the fact that there's a news event right within that zone, something definitely could happen that could either change the trend and then we continue to the upside, or it could lead to our 3rd level drop to the downside. It's impossible to anticipate which one it's going to be until that news comes out, but my thesis remains the same. Whilst price is under that low of the week level, I remain bearish. If price can get back above and successfully retest it this time, because it failed the retest last time, but if it can successfully retest this time, that is where I will flip my bias and become bullish again. If you got value from this video, don't forget to smash that like button if you haven't already, and check out our courses and the exchanges in the links down below.